This is Royce Jacob. Welcome back to the channel, and in this video I want to talk to you guys about the increasing divergence between our very bleak and uncertain economic reality and some of the mania that we've been seeing in the stock market recently. Alright, so I know this is news to no one. It's obvious at this point. I've said it many times. I know most of you understand this, but the stock market and the economy are two very different things. Alright, they're not related in any sense. They're almost inversely correlated at this point, which is crazy. So if the economy gets worse, it's almost like the stock market gets better. Truly is a tale of two cities, which truly worries me. And many of you guys who have tuned in before know that I have been bearish on the equity markets for the past week or so now, and I did just make the video covering the reasons that I'm technically bearish, looking at some of the charts, letting you guys know why I'm technically bearish. But as promised, in this video I'm gonna go over with you guys a few of the fundamental reasons why obviously our economy is honestly in shambles right now, and just adding to my fundamental bearish argument for equities on top of the already technical bearishness that I have. All right, so as always, we'll go over each topic that we're going to be discussing, and then we'll dive into each one individually. In front of us, TradingView, as always, we aren't looking at too many charts today. This one is more news focused because we are talking fundamentals, but I will show you guys the SPX quick. We will just quickly go over, as of Friday, as of the end of this trading week, what I'm thinking about the S&P 500, some of the other equity indices, because we did close relatively flat. It was a very volatile day, but we did close flat, so I'll go over that quickly. And I also want to show you guys quickly the DXY, which is the dollar index. I also mentioned I'd be talking to you guys about this yesterday. So the dollar index is pretty much the US dollar based against a whole bunch of other international fiat currencies, all right? So it just tracks how well the dollar is doing in a pool of other fiat currencies. So we'll take a look at that, because a strengthening dollar means a weakening stock market and pretty much anything aside from the dollar. That's why we saw the dollar spike incredibly back in March when we saw the liquidity crisis, when everything else tanked. And right now, as everything's ripping, the dollar has lost a lot of its steam, but I think it might be trying to make a bounce up. And again, if the dollar bounces up, equities and almost every other asset, it's very likely will come down and correct, all right? So we'll take a look at that as well. Those are the only two charts we're going to be looking at. Let's move on here. I also want to read you guys this, okay? So this is a single passage. I just want to read you guys at least a single passage from the newsletter that I sent out this morning, all right? So even if you guys aren't currently bearish on equities like I am, please just be cautious buying right now. There's no shame in not doing anything. There's so many times in my past when I wish I did nothing, but instead forced trades. Can you guys guess what happened? I lost money. Never hesitate to play defense for a bit. All right, so again, even if you aren't bearish on equities, if you think stocks will just keep going up, that's perfectly fine. Everyone is entitled to their own opinion, to each their own. But please, you guys, just be cautious if you're thinking about being a buyer at these levels. Even if you're not a seller, that's perfectly fine. Just please be cautious if you're thinking about being a buyer right now. All right, in terms of articles, we have this one, which I think is very good. So Stanley Druckenmiller says the stock market is an absolute raging mania, which I 100% agree with. I think no one can dispute that. All right, so we will go over this. Stanley Druckenmiller right up there with Warren Buffett, Paul Tudor Jones, kind of on that Mount Rushmore of institutional just legends. So what this guy says, I know whatever, maybe some of you newer traders will think, oh, well, this guy's a boomer. This guy doesn't know the times. He doesn't understand the times. This guy gets it. As does Warren Buffett, as does so many of these legacy players, because they've been around. They know what history looks like in every economic environment, okay? So I want to say this right off the bat as well, because I know there'll probably be some comments about this. The reason the markets are so diverged from the economic reality is because, primarily at least, the Fed has printed and pumped trillions of dollars into the market. So I just want to say that right now. I've heard every argument against that, why that won't cause the market to go down. Don't fight the Fed. The Fed will keep it propped up forever. I believe that they did their best, and they will continue to do their best, but I think, personally, at least I could be wrong. Remember that about everything I'm saying right now. I could be wrong, but I don't think, I've heard every argument, I don't think that will be the case, and I think the Fed will start to lose this battle as the economy just continues to get worse and worse, all right? And we will go on to talk stimulus as well. Okay, so U.S. fiscal stimulus chances fade with Republican bill blocked. All right, so no stimulus, especially no. Okay, so this isn't even like, this is just for small and medium-sized businesses at this point. Almost say goodbye to a second stimulus check, which we're going to look at here as well. So second $1,200 stimulus checks had bipartisan support. Now they could be a long shot. So the way things are looking right now, the freaking Republicans and Democrats, they keep butting heads, which is no surprise at all, but they can't come to an agreement. And without not getting this second $1,200 stimulus check will be very detrimental to the markets, in my opinion, because the helicopter money's done, all right? Once people stop getting free money, and I'm sorry if I offend some of you with that. I have many friends and family who are getting this free money, but realistically, it is just, at this point, you're getting free money. And once that free money stops and people realize that they have to start saving their money. They actually don't have money, and they can't be, especially if the market starts to fall and they're losing money in the markets. So much of the new money, the weak hands, as I've been saying, again, it's great that retail investors are getting interested. It's great that people are financially educating themselves and getting interested in this, because this is what creates lifelong wealth. But all the stars are aligning, as I've said a few times in the past. All the stars are aligning perfectly imperfect right now for a correction in the equity markets right now. And this is a big one right here. So no $1,200 stimulus checks, as well as a pushback stimulus overall, is very bearish for US equities in my mind. Okay, so we'll then go on to jobless claims. Okay, so jobless claims still suck, you guys. U.S. job losses persist as claims come in higher than forecast. Continuing claims, pandemic assistance claims also increased. Initial state filings were uncharged at 884,000 last week. So keep in mind, you guys, I want to say this right off the bat before we dive in deeper this later on. 884K, although it doesn't seem as bad, it's not as bad. It is tapered. It's definitely lower than like March and stuff at the peak of the pandemic. But keep in mind, 884,000, where we're at right now, new jobless claims, is worse by far than at any point in history, even the Great Depression. This is far worse than at any, like what is happening now, even though it might seem a little better than it was because things were so bad, is still worse than at any point in history. So just keep that in mind, you guys. And then I just have this chart to look at with you guys. This is just supplemental to this right here, is complementary, I'm sorry. Yeah, so this just goes along with that previous article. I'm not reading anything here, but I just want to show you guys what it looks like. So again, you guys can see here, it's coming back up. It did, like it was at its ultimate low back in early August when everyone thought things might reopen. But you guys, the world is just so crazy. Again, you got, like, everything is just so uncertain right now, which is my like primary just kind of bird's eye view argument for why I'm uncertain about equities, because equities are a bubble. I played many bubble in my day. I can recognize a bubble when I see one. I know hype, I know mania. And equities right now do seem like a bubble. Even if the Fed is holding them up, even if they're keeping them propped up, I think there's many other forces, there's many other factors that you have to consider when deeming this a bubble, which I have deemed it to be. Okay, so again, we'll go through all that more in depth. Once again, you guys, before we get into it though, I will ask you guys to please give the video a like if you do go on to gain value from it. Subscribe to the channel. If you're new around here, please help me get to 20K. And check out my complete portfolio and daily newsletter. First link in the description if you're interested in my exact positions in my entire portfolio, literally exactly as it states. Understanding how I'm kind of playing defensive offense right now, how I'm hedging my portfolio with the idea that equities will pull back. All right. Along with that, I do send out a daily newsletter. That's what this guy is every trading day during market hours, talking about my thoughts about the general markets, as well as rationalizing the individual trades that I made that day along with the portfolio update. So first link in the description if you're interested. If not, no worries at all. That said, let's get into this. So we'll kick it off with technicals, just because we very briefly summarized over the fundamentals. So I'll just give you guys a quick technical analysis on the SPX again. So S&P 500 again, all equity indices will look similarly to this, just because it's a conglomerate of a whole bunch of large cap stocks. I do think now the S&P specifically has broken a very significant line of support. I'm sorry. So it broke down below this line of support right here that it's been holding over the course of this rally. It is now successfully using that line as a line of resistance. Okay, so TA 101, you guys say this all the time. What was once a line of support becomes a new line of resistance, and the fact that this is now using this as a line of resistance signifies to me that we are in fact in a downtrend. And I do believe next week, this upcoming week, so mid-September, if depending on when you're watching this video, I do think that by the end of this month we will see a full correction. Keep in mind, guys, it could be completely wrong. This rally could continue because it's just it's just proved so many people wrong. So it could prove me wrong again. But again, you guys, there's so many just forces at play right now that I believe we will see a significant pullback down to the level on the S&P of 3,000, which was previous highs this time last year. Okay, so there's a lot of support around here. It makes sense that we'd see a pullback down to previous highs. Okay, so old highs equals new lows. All right, so that is S&P. We'll take a look at the DXY as well before we get into some of the other stuff. So the DXY, the dollar index, has officially broken out of this downtrend. Okay, so you can see here, this line right here, this lower line acted as both a line of support and resistance. It broke above that. Once it broke above that, it pretty much just shot up to this absolute line of resistance, and it's now closed closed multiple daily candles above this line of resistance, okay? So this tells me that it's very likely that we'll come up and revisit previous lows, okay? So you can see back here in March, the low we set was around $95. I think it's very, very likely that we see a bounce now that it's broken out of this line of support, that we see a bounce up to the $95 region. After that, we might continue the downtrend. I think we will ultimately continue a downtrend over time, because when you print trillions of dollars in dollars, when you print trillions of dollars, it's ultimately going to devalue it. I don't care how many people have lost their jobs, how bad the economy is. You print trillions, the dollar loses its value, okay? And people lose perceived value of the dollar as well. So that's the dollar. Again, you guys, that's just two technical arguments for my ultimate fundamental arguments. So let's go over this. Once again, Druckenmiller says the stock market is an absolute raging mania. I'll just read you guys some highlights. We're not going to get too deep in these articles. Everybody loves a party, but inevitably after a big party, there's a hangover. Billionaire Stanley Druckenmiller told CNBC. Right now, we're in absolute raging mania. We've got commentators encouraging companies to do stock splits. Companies go up 50, 30, 40% on stock splits. That brings no value, but the stock goes up. So again, you guys, I've roasted stock splits. I hope you guys understand why stock splits are stupid at this point. But again, you guys, there's just so many new uneducated retail traders in the market. That's the reality. That's the reality of the situation. There's so many people, can't tell you how many people told me or asked me if they should buy Apple and Tesla because the stock is splitting. Obviously, it's cheaper now. I'm getting more of a discount. You still own the same percentage of the company after the stock splits. Crazy. But that just fuels my overall argument for why there's so many just weak-handed traders. I'm sorry if that sounds harsh, but just being real here, weak-handed traders in this current market environment. So moving on, U.S. fiscal stimulus chances fade with Republican bill blocked. Schumer hopes Republicans will come back to negotiating table. Republican senators express pessimism, is bad, about revived talks. Just read you guys this here to sum it up. Odds of another round of fiscal stimulus for the U.S. economy dropped on Thursday as senators headed out of Washington for the weekend following a partisan split over a slimmed-down package proposed by Republicans. So again, you guys, there's not much to dig into here. Again, tale as old as time. The right and left butting heads can't come to a conclusion. And this is bad because they've been trying this for so long. It's very unlikely, especially at this point, that we see a bill, okay? At least, like, they could. I hope they do for the good of all small and medium-sized businesses. But that aside, that's just keeping your mom and pop shops alive, which I want. I want that definitely. But let's get into the $1,200 stimulus checks. A second round of $1,200 stimulus checks was once a form of aid. Was one form of aid both sides of the aisle on Congress could agree on, yet Congress remains stalemated on other relief issues, and those payments could get sidelined, at least for now. Americans' financial needs could force politicians back to the negotiating table. Meanwhile, experts say the demand for additional aid continues to grow. Obviously, you guys, the economy still sucks, like we're seeing here, which we'll get into. The economy is still trash. It may seem like things, like we're still kind of in the honeymoon phase in a bad way. So we're still in the phase of kind of like where it's not. I know we're pretty deep, like 6 months into this already, but it still seems like the storm has yet to come. This is still, in my opinion, kind of the calm before the greater storm, the economic storm at least. I mean, obviously things will reopen over time. There will be a vaccine over time, but in terms of economics, I think our economy is about to be shot, okay? So, U.S. job losses persist as claims come in higher than forecast. Continuing claims, pandemic assistance claims also increase. Initial state filings were unchanged at 884K last week. Applications for U.S. state unemployment benefits held steady last week, a sign extensive job losses are persisting as the nation struggles to control the coronavirus. Continuing claims, the total number of Americans claiming ongoing unemployment assistance in those programs rose 93,000 to 13.4 million in the week ended August 29th. So 13.4 million people, you guys, are currently out of jobs. It's a lot more than that realistically. And a lot of these people are not going to get their jobs back. Again, all these small, medium-sized, I have many friends who own small and medium-sized businesses. Their lives suck, to be honest. Like, it's super sad. But that's the reality. Like, so many. Like, I know the stock market's thriving right now. These big cap companies who literally are just getting money pumped into them for free, that's being printed and pumped into them, are fine. They're fine. Because they're public and they can just have people literally give them money. Small and medium-sized businesses who actually need customers, need cash flow, at least a lot of them, many of them, obviously consumer-facing or brick and mortar, are struggling. They're having the worst time ever right now. And many of the jobs, everyone who they employed, those jobs aren't coming back. Even with stimulus. Like, the times are harder than they've ever been economically. And that's just, you guys, I know I sound super pessimistic right now, but I'm just trying to be real. Because again, this is truly a tale of two cities right now. A tale, like two completely different stories happening in America, in the world right now, where the market is just pumping. And again, I'm doing very well in the market right now. I'm significantly green on the year. I'm thankful for that, but I feel an underlying sense of guilt because I'm contributing to that gap, which is kind of weird. I'm not going to get into the psychology of that right now, but it's just weird knowing that the market is absolutely ripping right now, and so many people are benefiting from that, while the majority of people, to be completely honest, are struggling harder than ever, and that sucks. And that's why I feel like there has to be some balancing at some point. The economy has to catch up with the market at some point. So we'll go here, take a look at this real quick. Once again, you guys, just looking at this, jobless claims are going up again, and again, it looks not as bad. So you see back here when we were tipping 6 million in March and April, that was peak pandemic, right? Which sucks. And again, even though 800,000 is significantly lower than 6 million, it's still higher than it's ever been in history. And once again, you guys, these people, all of these people, so many who have not yet gotten their jobs back, and so many who will not ever get the jobs they had pre-COVID, pre-pandemic back, is so bad. Like, it's just so bad. And you guys, don't fight the Fed, whatever argument you want to make there. I don't think they can keep this up forever. Again, with all the retail traders, with all the retail investors in this market who haven't truly experienced pain, who haven't truly experienced red, will eventually understand helicopter money isn't coming anymore. You're not getting free money. You actually have to save money. And money's going to get more scarce. The dollar going up means equities go down. Again, if people have their dollars, they're directly, the dollar and almost every other market on earth is inversely correlated. So if the dollar's going up, almost every other asset on the planet will inevitably go down. And again, I do think that over the course of this weekend, we will see the dollar pop up. I'm thinking next week's going to be bloody. Just to sum this up once again, you guys, I do think that by the end of September, we will see a significant correction in all equities, primarily tech, all right? Once again, if you guys want to know what exact put options I have on some of the companies I'm playing right now, Complete Portfolio Daily Newsletter. It's just a good way to support me as well if you appreciate the work I do here. YouTube's all right, but I mean, it's not paying the bills or anything. But either way, I appreciate you guys. I really appreciate you tuning in. Please let me know in the comments down below what you think about this. If you think I'm absolutely whack for thinking that we're going to see the equity markets pull back, or if you agree. And please, if you disagree, let me know why with a thoughtful comment. Don't just roast me. Just make a thoughtful, like, not thoughtful, not nice, but like a well thought out comment. All right, so I always love I just love talking to you guys down there. Love learning from you guys. Love talking shop. And I look forward to talking to you guys downstairs. Until next time, you guys, always remember, take action, make waves. Peace. Stay safe out there, guys.